Hey all, welcome to ShareTreck. This is Raj here. Friends, you know that I'm a real estate broker in Canada, so that is fantastic news for us after a very long time. We have been anticipating this for quite a while, and it is the central bank rate cut for Canada. So we have gone down from 5% to 4.75. It may seem a very small amount, but it's a big deal because there are a lot of mortgage holders who are in variable rates. And then they transitioned into fixed variable rates, which means they pay the fixed amount of money every year, and whatever principal is not paid back, that is added into the principal. So basically they are paying interest as much as they can, and the surplus of interest that they can't pay is getting converted into principal. There's a whole lot of people who would come for mortgage renewal in 2025, and they are going to renew in 2024 and 2026. And all of them, I think they have had interest somewhere in the range of 1.75 to 2 or 2.25 at the most. So for all of them, it's going to be a big jump. And the inflation fight is the main mandate for Bank of Canada. The problem for Canadian economy is basically that we have house prices which are quite high. And if the interest rates go down, it's expected that the real estate market will jump. But I have a slightly different take on it. I think that at this point of time in Canada, the differential between the interest rate for variable and fixed is around 2% approximately, if I'm not mistaken. Variable rate is somewhere around 6 point something after this rate cut, and fixed is around 4.75 or something in that region for 5 years fixed. So with that being the case, most of the buyers at this point of time would aim for fixed, not because they are not expecting rates to fall further, but because fixed is much cheaper than the variable. And with the future being uncertain, they would rather go for a 3-year fixed and stay with that. Now, if that is the case, then this reduction in rate is not going to benefit the person who is looking to buy their first house or a new house, or people who are going to move from their existing house to a bigger and better place. So those people are going to put their plans on hold until they see the US Fed reducing the rates, which I think could happen somewhere in September. And if that happens in September, then it will be reflected in the fixed mortgage rates, and they may go below 5. They may go below 4.75, and in that position, I think the market will start reviving for real estate. But till then, I think the big beneficiaries for this are going to be people in their fixed payment scheme in variable rates, who are now paying only interest, and the surplus of interest that they have not been able to pay is getting added to their principal. Those are the guys that are going to benefit. And overall, other sectors might also benefit a little bit because of this. People with line of credit may probably see some relief. So I think this is a move in the right direction. There are two more countries that have done rate reduction so far. That is Sweden and Switzerland. And it is expected that EU might reduce the rates next week. So that's the lay of the land. Now, what does that do to the US dollar? It makes the US dollar that much more stronger, and therefore imports to US will be much cheaper and US exports will be a bit expensive, which means the sectors that are exporting will probably see some pressure to their stock prices, and the sectors that are importing raw materials and importing stuff, they are going to find their stock prices going up a little bit, provided they're not re-exporting everything. So that's the whole scoop, my friends, and I'm really happy because I'll see some of my clients relaxing a little bit because of the drop in rates. 25 basis point is small, but it's still significant for anyone who has got debt to the hilt. So with that, my friends, I'd like to bring this video to an end. Thanks and have a great day. Bye.